Hi, everyone. Thank you so much for joining us. We have a fantastic set of panelists here today. As Kartik mentioned, my name is Teo Leibowitz. I work at The Block, where I focus predominantly on decentralized finance. And I'm just going to start by having our guests give brief introductions.
I'm Robert. I'm the founder of Compound. We've built an interest rate marketplace on Ethereum. It's very popular. If you don't yet use it, you should.
Hey everybody, I'm Kartik. I'm a partner at a fund called A.Capital, and I invest in a lot of early stage companies in crypto, and I'm an investor in companies like Keep, Aztec, Radar Relay, to name a few. And Maker.
I'm Nicholas Kunkel. I'm the head of backend services at MakerDAO, and I don't think I need to describe what we do, but we've created a stablecoin that's pegged to the US dollar, and it is crypto collateralized rather than fiat backed.
Very cool. Okay, let's just jump straight in. Let's start by defining DeFi itself. So is that actually an appropriate name? And I guess a follow-on question there. When you guys think about DeFi itself, are you approaching the space as a disruptive technology, or do you think that DeFi can serve as a legitimate and sanctioned alternative to the legacy financial system? Lots of questions there. But
there's a lot there, but I'll just jump in.
There is a lot there.
So I think DeFi is an umbrella term, and there's many things inside of that term. In general, people call it decentralized finance because it's running on a decentralized platform, Ethereum. But in my own head and team and company, we actually call it open finance a lot of times, because what it really is financial tools, applications, and markets that are open to the whole world, that are transparent, that are running as code on a blockchain that you can interact with, that you can build on top of, that you can extend, and that you can combine. And there's not an entire amount of decentralization. I think a lot of these projects have the goal, including Compound, of over time becoming incredibly decentralized, such that you don't have to, count on there being a team or there being an organization that supports it. The whole world, the whole community can support it. But the term DeFi is essentially just like this, umbrella.
I'd be curious to see how many things we disagree on here, so it'll be fun. I actually agree. I mean, I'm not sure if I think open finance is also the best term. However, I think it's better than DeFi, just because at least it kind of hedges and damage controls over like the extreme definition of what you can assume on the decentralized version of it. But to me, open finance makes sense, and it's because I guess what you're still outlining is that the part of things being permissionless and inspectable and open is still true. Decentralized becomes more on like who gets to decide what to do here, and that's kind of where you get into the definition mess here. But open finance is something that I'm also in favor of for the moment, and I guess we can do a second round of the second part of your question, unless you want us to dig in right now.
Yeah, go for it.
I mean, so on my end, the way I've always thought about decentralization has been right over the years, someone always comes to you right with a problem like, oh, it's decentralized, this is decentralized. And my kind of thought exercise that I always do is I try to replace that word with the word trustless. And does what this person is saying to me still make sense in that context? And so when we talk about DeFi, like in terms of meaning, like I think it does make sense in that context. It's trustless finance, right? And when to what you were saying, Teo, on is it disruptive? Is it going to work in harmony? I think we kind of have to look at that we have some advantages over the legacy financial system, but by no means do we excel in everything. So right, I think there is going to be a niche for us that we are going to fill in and do extremely well in. Right, we are right. Keyword one being trustless. Right, the second is transparency. Right. I dare you to go down the street to Bank of America and say, I want to take out a loan, right? And but before I do, I want to take a look at your entire loan book, just to make sure that you're like solvent, right? They tell you to screw off. But for us, it's not even something we need to build out, right? It's just an innate property of the platform, and so I think that's a huge benefit to us. And the third thing is composability, right? We can compose, like multiple stacks of things together in ways that legacy financial system could only dream of, right? The speed at which we can iterate. And I think that's going to be hugely important. Just the fact that you can do atomic transactions, right? Which means you can do a bunch of different actions just in a single transaction. And at the end, right, it either everything succeeds or everything fails. That's a really unique property of blockchains that you can't emulate in traditional finance, right? So if you're going to do an arbitrage in traditional finance, right, you're going to, buy something over here and sell something over here, and you're probabilistically relying on the fact that both of those are going to execute. And if one doesn't, right, well, you screwed up your arbitrage, but it's okay because most of the time you're going to succeed. Well, in blockchain world, you can guarantee that your arbitrage, either executes completely or doesn't execute at all. So if we leverage those types of properties, I think we'll do very, very well.
Great. And just to keep this panel as relevant as possible, so as Will alluded to earlier, the total value locked in open finance, decentralized finance protocols hit $1 billion yesterday. So how significant is this milestone? Is total value locked an appropriate metric for DeFi space or for the various verticals that fall under DeFi? And does 1 billion locked over or understate the success of DeFi today?
Well, hopefully this isn't too controversial, but I don't think $1 billion in DeFi matters. I think it's, in a lot of ways, an arbitrary milestone that sounds great, but it doesn't really mean that much yet. It's proof that there's something here, that there's teams that are building things that are interesting, that are attracting capital, that are changing the way that people store value and earn value, but it's still a small number in the scope of things. Compared to crypto markets in general, it's a pittance. Compared to financial markets in general, it's even smaller. It's just in some ways proof that the firing gun has been fired and the real games are about to begin.
You kind of stole half of what I was going to say. And I agree. I mean, not that it's not insignificant. It's more about the real interpretation of that $1 billion being locked to me is that it signals that there is interest. And yes, if you can put this in perspective, it may be not even a drop in the bucket, but $1 billion is still a lot, given that majority of it is still individuals using these services. And if you look at anywhere from the average transaction value to how much they trade or own, that is a big couple order of magnitude multiple of what that looks like. And to me, it just, in a way, adds another boost of confidence for others to kind of consider this seriously, anywhere from having others look into it to build more services on top of, to saying, hey, we think anywhere from the top players that have all the liquidity locked in, that we are comfortable relying on them for a bit longer, because that is a proof point of them being safe enough to use or reconsider.
Yeah, I don't really have much more to add on to that. I think you said it best. It's we shouldn't overstate this as some great accomplishment, but it is a stepping stone, and I think it's more the optics of it are quite important. So when we talk to enterprise partners, when we talk to regulators, right, being able to have that kind of stamp of there's something actually happening here, it does make them take you a little bit more seriously. So the optics are important, but in terms of like Robert said earlier, it's really just a drop in the bucket at this point.
Absolutely, and so I think Kartik alluded to this idea that right now DeFi is predominantly a retail-driven phenomenon. And Nick and Robert, I assume you guys have regular conversations with institutions. So what are the primary barriers to institutional participation in this industry?
So there's a couple barriers that, I think individuals can very easily get past, but institutions have a harder time getting past. There's really three in my mind. There's the technical risks, there's the regulatory risks, and there's the market risks. And DeFi in general is relatively unproven on all of these. Every project has had some technical challenges. We employ lots of auditors, lots of security consultants to eliminate those risks as much as possible, but there's still non-zero risks. An individual might say, hey, if there's a small but non-zero risk, I'll take it. In terms of the market risks, we still don't know how these systems scale as they get larger, as the economics of them unfold. Shout out to Gauntlet, but they just released a market risk report for Compound today, which has an application to Maker and pretty much any DeFi project, starting to look at, how do these function as they become really big? When it's $10 billion in DeFi, does this work in the same way? And lastly, there's the regulatory component, which is, all of this is new. There's extreme benefits to all of these technologies in that they're fair, they're transparent, they work as advertised, but it's still an unknown. And so institutions take more time to get comfortable with all three of those risks, where an individual just lists, they see a financial product they like and they use it, and that's amazing. I think institutions are coming around very rapidly as all three of these risks are proven to be, safe.
No, that's actually right. I think it is ultimately about risk assessment, independent of what DeFi allows you to do for an individual or how much you can propagate those existing services. For example, the US system has to other places. You still have to ultimately comply with the legal system that exists in that region, and the risk stays there because you have to work within that framework. And that often becomes the barrier for a lot of the institutions to consider this thing, and that's sort of where you kind of always end up in a phase where a lab is what ends up trying something internally, but you need something really big or really sort of a guarantee to be present for them to take it seriously or scale that up. And we're kind of seeing that. So when people say, are institutions coming? I think the answer is yes. However, it depends on what that step function looks like for them to actually announce that they're coming, because everybody is playing around with this thing. Everybody has a team that's exploring something like this. They are playing with it, even if it's personally trying to evaluate what's going on. But we haven't seen the phase where everybody sort of jumped in. And to me, that's a good and bad thing, because if you look at the history of technology, these are often the scenarios and the inflection points where you actually now have the window of opportunity to become what we call institutions now. Like, new players can come in and take the throne. And that's kind of where we are, which is why it's exciting and also, like, in a way, scary at the same time.
Yeah, I agree with everything that was said so far.
Sure.
We'll start with him first now.
Part of being the last person.
Yeah,
guys, don't give me a lot of wiggle room here.
You go first.
We'll start with Nick on this next one, and I think it's...
I guess the one thing I can add is that besides the three kind of risks that you mentioned, Robert, is kind of we're not at the size yet for many of them to care beyond just playing around with it, until the game is big enough for it to be worth playing, right? For them to incur all of the administrative and operational overhead. We're going to continue to kind of struggle there, but right, we're experiencing growth. The rate of growth is pretty good. So if we continue this, it's really only a matter of it's more a matter of when, not if.
Great. So let's briefly explore another type of risk, which is governance risk. So what are the implications, and I guess this question is mainly targeted towards Robert and Nick. What are the implications of DeFi protocols like Maker, like Compound, reaching a point of systematic significance with respect to governance influence on base layer protocols? So I'll give you an example here. Could MKR holders effectively decide the winner in the event of an Ethereum fork?
I mean, that last bit is a little bit touchy. I don't think we, as a community, would be deciding on the winner of a fork. But if you look back to kind of what happened in the original split, right, with ETH, there wasn't like some cabal that like came together and decided, okay, this is going to be the fork that everyone's going to support. It was mostly just, who are the stakeholders, right? The stakeholders were, the miners, the stakeholders were the developers, the stakeholders were the different projects that were active at the time that had built up into, a sizable community. And it was much less about a decision of, well, we're going there, where are you going? And much just like a very natural progression on that front. But tackling more of the governance side, which I think is what you're really after here, I think it's a really unique experiment that we can do here. I think kind of voter participation in terms of governance has been quite low across the board in the space, and honestly, that doesn't surprise me. It kind of comes down to having enough stake where the pie is big enough and the stake that individual stakeholders have in the system is big enough that it economically affects them to such a degree that they're inclined to participate in governance, not as an extra, but as a functional requirement of their stake. And so this is one of those things that we're really just going to have to solve through growth. If you just hold one MKR token, it's not the kumbaya answer, but it's probably not worth your time to use that one MKR to vote, versus if you are, a whale and you have like, I don't know, 200K or something worth, totally is worth your time, right? Because an adverse governance decision could affect your investment, right?
So I think about governance as who calls the shots. How many people are involved in making a decision, and what should that number be and why? I think in a lot of cases, a lot of projects should start out, with governance really being a centralized thing, where there's a small controlled group of people that manages a product, that builds it, that runs it, that knows it best, that makes all the decisions. But that's not something that scales, right? Like, if one company had to decide a stock price, it'd be extremely inefficient. But when the invisible hand does, and there's like massive markets and millions of people deciding something, it's super efficient. And so I think the goal is over time to continuously search for, how many people should be involved in making a decision and how. And that's governance, and it leads to a safer, more stable, better, and more efficient outcome. And I think, at Compound, our goal is to find, the answer to that, which is, how should we, enable people to set the rules, the parameters, and the functionality of the protocol that we've built, or how should it be upgraded? And that's an evolving question that's going to take a long time to play out.
Let's move on to business models within DeFi. So,
Why'd you have quotes over there?
pardon?
What's with the air quotes?
With the air quotes, well, if you look at the panelists on stage, you see a decent diversity today, at least, as far as the approach that the protocols have taken. But more broadly, we're starting to see projects converge on a cash flow type model, which was, arguably pioneered by projects like Maker, and we're now starting to see 0x, for example, move in that direction with their new ZRX token economics. So 2020, is it too early to suggest that this is the optimal business model for protocols? And what are the challenges, and are there perhaps other directions that protocols could take?
So back in 2016, 2017, you saw many projects kind of experimenting with like token design, right? I think a buzzword that year was like tokenomics, which I always thought was a little bit interesting. Right, and you had this experiment between like, oh, well, there's this thing called a utility token, and that's the kind of token you should be striving for, and then other people were like, no, you should have more of a security-like type of token. And I think what you're seeing, kind of this convergence, is just, in more recent times, is more a the acknowledgement that there is one kind of token model that seems to align incentives incredibly well. And so you're seeing a trend towards that token model, but that is not to say that there are not other effective token models out there. I just don't think we've had enough time to really experiment with what those are. And so we're seeing a lot of, well, this works, let's do that, rather than trying to play hide and go seek with another possible solution.
I'll echo some of the similar stuff, but I think from at least my perspective, a lot of it comes down to the fact that changing psychological behavior is hard and it takes a lot of time. It's the same reason why people still argue that, hey, Bitcoin should be worth zero, even though it's not the case. Like it just doesn't agree with their mental model of what they're taught or what they grew up with or what they read in books. And that's why you, in most cases, in aggregate, converge on things that you kind of already understand. DCF is something we've seen in other places. Most institutions and financial systems understand this thing. Even startups understand this thing. You may have anywhere from different multiples for something is a bank versus a startup, and you could be off on those ratios for like what that looks like. However, it kind of makes sense for others to just be like, okay, I can kind of agree with this thing. And you kind of then have some room for variation on, let's kind of tweak some of these things, so it may still resemble something like that, but we have now room for experimentation. So that's, to me, like the primary reason why I think it's what's going on. Obviously, it doesn't mean that it's not a good or it's not a criticism of the model. It's just that it works, and others are better off copying or even using similar models to introduce them in their projects than to re-innovate. And not to say that there are not other things that are in the works. It's just that we now need a lot more time because we have not either reached an equilibrium or just not enough cycles have passed for us to see what does and doesn't work. And that's kind of where, to me, the state of what the ecosystem is. But there are a lot more other models that are out there, anywhere from sharing fees to sharing risk, instead of just kind of giving people directly the DCF model. But to me, all of this is still about figuring out a way for any of these systems to share wealth and also risk. And I think now that the tech is there to actually have the co-op vision from like decades ago to be like applied at scale, we will see a lot of interesting things come out.
So Compound's kind of the black sheep in DeFi, in that we don't have a token, we don't have a business model yet. Our model is we're a traditional venture-backed company that's trying to build awesome technology, awesome interest rate markets that everyone else can access and build upon and figure out the rest later. And we've really, had a very narrow-minded thought that like we're not going to try to have a business model yet. We're not going to monetize this yet. The only thing that's important is building a market that people want to use, that grows bigger, and that people can rely on for hopefully 20, 50, 100 years. And over the next 20, 50, 100 years, we'll figure out how to make a lot of money.
Great. So, Robert, as well as being the CEO at Compound, you also serve as an investor at Robo Ventures. Kartik is obviously an investor as well. So I'd like to take a look at the investment landscape briefly. So currently MKR, MakerDAO's token, trades at somewhere around a $500 million market cap. Compound recently raised at a $100 million valuation, I think. And as you said, you haven't booked any revenue to date. So when you look at the DeFi landscape as an investor, do you think current valuations are justified? Has the market perhaps got ahead of itself? And if so, what will it take for these valuations to normalize?
Well, strong bias. I think Compound is deeply undervalued. But joking aside, I think DeFi in general is one where there's asymmetric upside. We all sort of feel it in our bones right now that it's still small, but it could become really, really, really big. We're at such an early chapter of the technology. I personally don't know exactly what it's going to become or how big it's going to become, but it has the possibility, and this goes back to the very first question, of being really disruptive or and really changing the way financial markets operate. But it's not there yet, right? It's kind of like betting on internet stocks in '94. Like most of them will fizzle out and die horrible deaths, but the internet, like there's something there. So I think we're sort of in that world right now where things can become extremely valuable, and because of that probability, they trade for, kind of like the expected value of all the different outcomes, most of which are going to be zero, and some of them might be absolutely ginormous. So I think, right now, like, the valuations are what they are. I don't think they're unprecedented. I mean, Maker has built something amazing. Like, I think there's a lot of ways to value it, but like $500 million seems pretty reasonable to me in a lot of ways. I know a lot of people who think it's deeply undervalued. In the early stage, world, with a lot of teams, valuations have come in a lot, like versus 2 years ago. And I think that's also justified. I think, we're kind of going back to a world where it's two founders and idea, it should be raising money and, not $30, $50 million valuations.
I agree with a lot of what Robert said. I think there are, to me, deltas where you get to sort of understand what was going on in a window and see like how that changed the ecosystem. 2 years ago, we were in that phase where we were figuring out what is possible on a platform, which is in this case Ethereum, while also building on top of that platform. So this is like the analogy of like fixing a plane water in midair, and the engine's kind of just broken, and you're tweaking it and all that stuff, right? So you also didn't know what the possibilities were, and precisely kind of as a result of that, what ended up happening a few years ago was we obviously understood that there is a potential for this to be massive. I'm talking about specifically, let's say, an idea that was pitched, but you could not assign a probability on the success, but the distribution, but also the time it's going to take for this. So you had to, in a way, either be in or out for those scenarios to see, like, maybe this didn't take off, then I need to be part of that. A lot of timelines were off. Some projects still didn't were not able to deliver what they promised, partially because either they didn't realize what was or was not possible, and largely because it's hard to kind of just make timelines work because so much of it is unknown. And over the last few years, we've obviously corrected a lot on that. So as kind of Robert said, like at least on the early stage side, DeFi or general other crypto companies, we are almost reaching parity with what other crypto companies are doing. Our fund is not a crypto-only fund, and I get to see a decent amount of other sectors that are looking for investment, and it is, to me, becoming just the way traditional investing has worked, which is you're betting on the ability for somebody to execute, and the reflection of the price or premium on an opportunity is relatively the same.
Yeah, I mean, not too much to add. I think that the crypto valuations in general, I mean, in terms of an order of magnitude, they're probably around right. Anything more descriptive than that, and you're kind of just making it up as you go. Right, you touched on that there's this asymmetric upside, right? And so I think that asymmetric upside can warrant, extremely high valuations, even if today, right, you can't really justify them. But I think you need to have kind of expectations of growth, right, that accompany those assumptions. And if you are not seeing that growth, if you're not seeing that adoption, well, then your expected, value of that, should probably diminish really quickly, right? So if projects can keep up their growth, right, if they can accelerate their growth, then yeah, I think the valuations are warranted. But as soon as they don't, right, yeah, it becomes harder and harder.
Sure. And we have seen remarkable growth in both the Compound and Maker ecosystems. It is still obviously very early days, but is it too early to suggest that certain protocols like Compound and Maker are here to stay and here to dominate their respective verticals? What would it take for a new project to surpass the Compounds and Makers of this world? And I guess one kind of additional question is, what would happen if Compound were to release their own stablecoin?
Who should go first?
Well, I have to respond to that. First off, Compound will not release its own stablecoin, so
Shame.
Maker can rest safely. But
I'm a little bit disappointed.
Yeah, I know some people have actually suggested that Compound one day will, but no, we have zero plans to create a stablecoin. I'll go on record and say that. You can tweet that. We will never have a stablecoin that we create. It's just not what Compound does.
I had a great answer lined up too if you said yes.
No, but I do think that certain protocols and applications can get into this virtuous cycle where they can establish themselves and they get better and better and better over time. And that's one of the magical things about DeFi is that the longer that Maker and Compound exist, the more things get built alongside them, on top of them, the more ingrained in the ecosystem they become, and they constantly get better. Without Maker having to do anything, a year from now, DAI is going to be better, right? Period. A year from now, without us having to do anything, Compound is going to be better than it is today. And so I think there's a couple protocols that get into this like virtuous cycle or a positive feedback loop, and I think Compound and Maker are there, and I think it gets harder and harder and harder to supplant them. Just like I believe that it becomes harder to supplant Ethereum as the foundation for DeFi, the more that gets built on Ethereum. There's this network effect that starts to take off. And so, obviously I'm optimistic because it's the space we're in, but I think Compound and Maker are here to stay, hopefully for 20, 50, 100 years.
I have a slight disagreement to that, so I'll let Nick go first.
You want the punchline? Okay.
No, it's just, no, it's not a big disagreement. It's just the other side of that as an argument.
Yeah, I mean, I think we kind of enjoy very privileged positions right now, and it's great to be in that position, right? Because growth is a little easier to come by when you're like on the base layer and people are kind of just integrating you, building on top of you, building on top of you, building on top of you, right? It's this this concept of money Legos, right? That it's a great like euphemism that's been going around the past year. At the same time, right, nothing is guaranteed. For example, take a look at the rise of like Uniswap, right? From nothing in the span of a year to absorbing a bunch of the ecosystem's liquidity, right? Doing a bunch of the systems like transactional capacity. Things can arise very, very quickly in this space, right? And adoption can happen very, very quickly. So I think it would be foolish to kind of just assume that we're entrenched. Like, no, we're going to have to keep building, expanding, adding utility, right? Adding liquidity, more competitive spreads, right? And if we do that, right, I think we'll do very well. But we shouldn't be complacent.
Yeah, I mean, like, there's a good odd that Compound and Maker stay for a long time and get used, and it's partly because there are network effects of this composability that you get to build on top of it because somebody has done the work for you. And largely, that's been true for what we've seen in other developer platforms. Like, in a way, like, you can have a equation where the economic value produced by what's on top of the end product is more than what the value capture here is on the protocol being used. There are some differences in the economics of how that works on decentralized networks, but largely it is possible. However, that still requires always, active evangelism, obviously constant quest to build and improve the product, make it usable for the end audience. So I don't disagree with what both Robert and Nick said. The thing I want to kind of point out is that there's still a possibility that it doesn't mean that it's a guarantee. And obviously nobody said there it is a guarantee, but if you look at it from just the math of how this actually can evolve, even if we say there's 1 million users in DeFi right now that are active on a monthly or a daily basis, that is still a small percentage of possible users that can exist. And it takes like just another 1 million to dilute the whole market share in half. So as hundreds of millions of people come in, you have an equal opportunity for somebody else to become the winner, and you have to kind of be in a position as these projects on stage to capture that audience, but it doesn't mean that it gives you a guarantee or a better odds.
Sure, and probably not 1 million, if I had to guess. Penultimate question, which is, if you had to give one piece of advice to prospective founders that are considering embarking on this DeFi product journey, what would it be?
I can start. Build a product that people can use. It is good to talk about the end vision of what you want this to enable for somebody else. Ultimately, these are developer-first platforms or utilities or SDKs, whatever you want to call it, at their stage. But at the end, it only appeals and gets used and liked by and loved by everybody if they are able to use it quickly or immediately and see the immediate value. So I've seen a lot of people talk about generally how they approach going to market, and I would say, like, take the risk of showing people what's possible instead of hoping that somebody else will show others.
I'll go next. So I agree with that. I think, as a prospective founder, you have to get out there and you have to ship. But it also has to be balanced against what I consider like the first law, which is don't lose anyone's money, period. There's this constant trade-off between wanting to move quickly and being responsible. And as you build a product in crypto, like a founder should always remember that you're dealing with users and money. And while no one's gonna die if you lose $1,000 of their ETH, like the first rule has to be don't ever lose anyone's money, period.
Like missing a Facebook post, it being get deleted is different than like the sentimental value that's attached with people's personal wealth, and that's a big premise here.
Yeah, like if you're building like a a traditional web product, like the downsides are very small. But when you're building a financial product, like in the existing financial world, these things are extremely regulated because like there is loss and there is harm if you mess up. So the first rule is don't mess up.
Okay, I mean, I agree with what both of you said, obviously. I like to think of it a bit more abstract and higher level is, look, if you're a founder, make sure that, your solution is actually addressing an actual problem that people have. It seems quite simple, but not, when you see what's out there, it doesn't seem like everyone is doing that, right? So, identify this gap, then create a solution for that gap, and now you need to, find out like, is this problem that you've thought was a thing, like does it actually exist? Do people actually care? Another like kind of thing that I see a lot is you see very, very ambitious things that rely on that have a lot of external dependencies that you don't control, right? So maybe you need, like hyper liquid, markets, or maybe you need, like big financial institutions, to come in, right? So there's like, high, barrier to entry. You can scale up to that, but you need to start smaller, right? You cannot rely on these things and then just go and build something and then be like, well, here it is, and it doesn't really do anything because no one currently has that problem.
Yeah, I guess just to kind of comment on that, I think especially as we kind of look at the traditional startups and how they operate, the key to iteration is controlling as many variables as possible. And if you have to rely on something else existing before you can get started, or somebody else doing their part so you can actually function, that's just not a good recipe.
Sure, and I can imagine that's kind of a double-edged sword, considering a large part of the value proposition of DeFi is this, ease of composability as well. So just to wrap things up, how is DeFi going to evolve this year? What products and services are missing, and what kind of new products can we expect from the Compound team and perhaps Maker as well? If you guys want to announce anything on stage.
Is it a stablecoin?
Yeah.
We're not launching a stablecoin. I think this year is going to be the best year ever for DeFi. I mean, it's funny because DeFi is like 2 years old, but like the velocity of what people are shipping is increasing somewhat exponentially. We're going to see more and more experiments, more products we haven't conceived of yet, wild financial tools, wild games, wild things that like we just can't anticipate. So I don't know, like, is the answer. There's like so much that's going to happen. It's just going to be really exciting. At Compound, we have nothing to announce. There's no stablecoin, but our mission over the next year, is really to make what we've built safer, more stable, more open to the community to help us manage it. And so there's nothing going to be too radical that we do this year, but you're going to find a constant, forward march of improving the thing that we do have.
I don't know, Robert, you kind of are saying stablecoin a lot here. Sounds pretty suspect.
Yeah,
Compound stablecoin.
You sound pretty defensive,
Compound stablecoin will not happen.
I mean, from my perspective, it's kind of being part of ETH Global. I've seen a lot of projects just experiment, and as you kind of see each of these hackathons happen over the course of the year, you kind of quickly get to see the actual velocity of people leaning towards and experimenting with DeFi projects. So kind of what I'm excited about is just generally people actually taking the composability to that permutation table you can think of and trying every possible thing that's possible and launching it to see if something clicks. Obviously, this is not something that everybody can jump in and use, but the room for experimentation is kind of what I'm actually really excited about, because we have seen composability just generally being played out, but it's only been for to me, like not in the quantities I would like to see. There's a lot more you can do, especially in the permissionless setup, that we have yet to see. And on top of that, I mean, what I actually really am excited about is other models to, in a way, hedge against the risk. We kind of have not invested enough in what happens if something goes wrong. What does it mean to have downside protection or insurance here? How do you even do that in a manner that's not fully well, that's either fully decentralized or just generally compatible with how we understand risk management in the traditional space. So those things excite me, and the biggest thing, at least, that I'm excited about is just in general, like how do we actually privacy comes into play here. Obviously, a lot of this is open and inspectable, but it doesn't mean that it has to be private. So things like Aztec launching or us being able to actually hide some of the inputs is going to enable a whole new set of products to come out.
Yep. I mean, you touched on this. I think privacy is going to be extremely important. So Aztec being one of the ones that I'm very excited about. I actually participated in the key generation ceremony. So, you know.
Number 7, or 27, actually.
Right on. Right, Tornado Cash looks pretty interesting as well. So being able to translate that kind of financial privacy in terms of if I send you some DAI, right, I don't want you being able to look at my account and seeing how many DAI do I have and who did I send my DAI to and how much did I send them. You know, these are kind of things we take for granted in the traditional world, but you know, in crypto, for some reason, you know, we don't really mind. But I think that's going to play an important role. The other thing you touched upon, like, you know, what crazy exciting stuff is going to happen. I think most innovations in finance that you see historically have been coming up with creative ways to redistribute risk and to, you know, attain leverage, and probably the third one is to optimize taxes in some way. You know, I'm going to ignore the third one for a second and just focus on the first two. Because of the composable nature of crypto, because of the way that you can design abstract units, so let's say like a token, the token's like a unit, and you can, you know, make your token have any kind of unique behavior that you want. And because of that, I think, you know, as the number of developers grow, as, you know, kind of we develop more mature developer tooling and we make it easier to develop on these platforms, the rate of kind of financial innovation you see is going to increase exponentially. And so I can't tell you what is the crazy new thing of 2020 that's going to come out, but I can guarantee you there will be at least one or even like 5 that we'll see. And this is just going to keep going and going and going and going.
That's extremely exciting.
It is.
Fantastic. Well, I think that's...
And maybe Compound will even release a stablecoin.
Maybe they will, yeah. It's still very clearly up for debate. I think that's all we have time for today. Thank you so much again to our brilliant panelists. And thank you, everyone, for joining us for this conversation.